So impact on monetary policy. Obviously, we've got central banks are already reacting. Bank of England monetary policy is likely to be looser in the coming months. That's the assessment of Mark Carney. He was suggesting that the negative impact on the UK economy will drive looser monetary policy over the summer months, probably. Now, that I think points towards August, because August being the next time we get an inflation report out from the MPC. Beyond that, it's November, and I think Carney's talking about the summer, so you probably point towards that August month to be the time that to be the next time that we get monetary policy possibly easing. Would that mean further quantitative easing? Well, I was reading today that possibly you could see sort of 0.25% to 0.25% to maybe cut interest rates or further quantitative easing of 100 billion sterling. That is possible, and certainly we'll see how that pans out. But as I said, August is the next time that we could see some monetary easing from the Bank of England, probably because July is too soon. ECB, but Mario Draghi has been talking about competitive devaluations, and that would, I mean, if he's already talking about it, the chances are they're already preparing for it, and the likelihood is that the ECB will want to try it in some sort of way and get ahead of the curve. Probably. I mean, this is all conjecture, I suppose, at this stage, because no one really knows the impact on economies. But I think the chances are that Draghi will not want to see the Eurozone or the ECB lag behind other central banks. I mean, already you're seeing the Chinese People's Bank of China devaluing the yuan. Let me show you. Chart that you saw initially was this chart here. The yuan being massively devalued actually in the last sort of couple of months. That was Brexit day, and we've seen subsequently the yuan consistently, the midpoint of the yuan being extended outwards. So the People's Bank of China is already trying to sort of react to the prospect of weaker economies and weaker growth around the world, and it certainly seems to be preparing for it through its monetary policy at the moment. So what would that mean for the ECB? Well, probably they'll react in some sort of way as well. So I think that would drive a lower or weaker euro. What's going to happen to the Fed monetary policy? Well, already we've seen. Let me just see if I can show you. Fed monetary policy. The expectations had been prior to Brexit that December was going to be a month that the Fed was going to move. This is the CME Group Fed Watch, and it sort of charts the expectations of monetary policy for the States. Now, in December, the chances of rate hike is actually about 15%. Seems to be. So the market is basically not factoring in a rate hike whatsoever. Now, I think it'll be very interesting to see, because I'll talk about the Fed meeting minutes a little bit later, but we've got the Fed meeting minutes tonight, and obviously the last Fed meeting came out just prior to the Brexit vote. It'll be very interesting to see what the Fed suggests in terms of its reaction to Brexit, because there were sort of mumblings of Brexit running up to in the last sort of meeting, and in her FOMC press conference last month, Janet Yellen talked about Brexit as well. So there's likely to be a fairly sizable reference to Brexit, I think, in the Fed meeting minutes tonight. So the market will be certainly focusing on that. That announcement comes out at 7 o'clock this evening, and quite how they then position themselves it will be interesting. I think there'll be movement on these Fed minutes tonight, because that will be certainly the main takeaway. Obviously, now we've got a Brexit that's in place. What is the market, or what is the Fed going to do next? Well, certainly the market is expecting no interest rate hike this year, and even the February meeting doesn't look likely either. Interesting that we're now even seeing possibility. Even rate cuts, you weren't seeing those previously, but still, it doesn't look like we're going to get a Fed rate hike anytime soon. Now, what does that do to the dollar? Well, I think that the fact is that the market is so concerned with the impact on global growth that the dollar becomes a safe haven trade, and that's attracting investors into the dollar. Now, you've seen, this is the dollar index, trade weighted dollar index. You've seen that was Brexit day, where the dollar strongly moved higher. It's since been sort of drifting lower, but yesterday was another turnaround day on the back of a massive safe haven shift again, a renewed sort of impetus for the safe haven trade. Concerns over global growth again pushing traders into the dollar. So every time you're seeing the market's concerned over Brexit, concerned over the global growth, you're seeing the dollar being bought. Dollar outperforming the major currencies, with one exception, and that being the yen. Yeah, that's a very interesting chart that we've got going there, the dollar index, which anyone who knows their technicals would argue, is that a bull flag possibility? Pulling higher. If you saw a move above the reaction high at 96.71, which we saw as 2-day high, actually 2 days of resistance up to that level. If you saw a move above that, that would drive gains. I think further gains on the dollar. You could certainly point towards this next resistance of the February high at 98.50 area, 98.60. So yeah, interesting that we're seeing the dollar strength on that. What would happen for the Bank of Japan as well? You've got the Bank of Japan, which is sort of fighting against deflation. Fell into 0.4% in CPI, negative 0.4%, I should say. Last month, you've got the strength of the yen as well. What is the Bank of Japan going to do? Is the market actually banking on the fact that the BOJ can't actually do anything really to make a change, to make a difference? It doesn't really seem as though the market has a massive amount of faith in the BOJ now, seeing as the fact that the yen continues to strengthen, pulling dollar yen ever towards a 100 big figure. But yeah, interesting. And the People's Bank of China, well, I've just shown you that chart of the devaluing yuan, and an attempt to push out China's economic problems onto the rest of the world by devaluing its currency.